Hello everyone, welcome to our Wednesday Q&A. I'm Eric Griffin, President of iTeam Trading. With me I have Lynette Zang, our Chief Market Analyst. For those of you who don't know or are tuning in for the first time, we take your questions that you submit to us via email to questions@itmtrading.com. Take them, we put them here on the screen in front of us, so we ask them live, so you get a real, true, spontaneous, organic response. Are you ready?
I am so ready.
Okay, cool. Zay S asks, once metal markets make a major upswing in price and are no longer being suppressed, where will the liquidity come from in order for us to sell at these much higher prices?
Well, history shows us that not everybody loses all of their wealth. Those that are in the right place at the right time with the right asset will retain that wealth, and that's where that liquidity comes from. Because at that juncture, everybody knows that the currency is absolutely worthless, and they're trying to hold on to whatever purchasing power they can. So the demand actually grows in those that are in the top 10% or whatever. I don't know what the percentage of the loss is. But I can tell you, in Venezuela, 90% of the population ended up in abject poverty. Maybe globally on average, it's usually about 80%. So the liquidity is going to come from that 10 to 20% of the population that still has the wealth, and their standard of living doesn't really change as much, but there are a lot more opportunities for them.
Yeah, and to say it in a different way, because we get this question a lot, and it's people are naturally, confused by the answer to it sometimes. So another way of saying it is, for example, gold is like just pure bullion, right? It generally tends to hold its purchasing power over time. So if we get into a hyperinflationary environment where you are, let's say you made $50,000 a year, and, as we get into hyperinflation, you'll be making more in nominal terms, right? It'll have less purchasing power, but let's say the value of the dollar, the value of that salary goes to $200,000. Now, it won't adjust immediately, but over time, it does adjust if you're working, and you get paid more in dollars, but they don't buy as much.
And it won't keep pace with inflation. The government will mandate
it
higher
doesn't
wages,
keep up with inflation, but people will be making, my point is that people will be making more money in nominal terms because of the massive amounts of inflation, right? So not everybody will be able to afford gold, especially as it gets into the later stages, like what Lynette said, right? Initially, people will be able to do that, but as we get further into a hyperinflation or a reset type scenario, by that time, most people are in abject poverty because it's just wiped out everything that they own. That's why it's definitely great to own it now, because you can always liquidate it, whether that's in your currency now or you could liquidate it, right? You could, let's say you lived here in the United States and we were going through hyperinflation, you could always liquidate it in Europe and get euros and then convert that to dollars.
You could also just convert it right to dollars.
You could, but I'm just giving another example of how you can, if this is a question specifically of who's going to be able to buy these coins.
Well,
right?
It's true. And I want to add something to that, and that is that both physical gold and silver are used across every single sector of the global economy. So there's always going to be demand for gold and silver. Sometimes it's higher, sometimes it's lower, but there's always demand. At least it has been for 6,000 years. So is that suddenly magically going to change? No, it actually gets more intense as people understand what's really happening to the fiat.
Correct. There'll be a massive amount of demand. Everyone will want it. As we get further into a hyperinflationary situation, less people will be able to buy it.
Yes.
And those that have the most wealth will be the ones buying it because they know it's the only thing that really does its job of holding your purchasing power over time. That's why you want to own it now. And I know what you're saying, like, hey, if I buy it now, who am I going to sell it to later? Well, there's always a buyer. There's always a buyer. And if the United States is the one that's experiencing the hyperinflation, but for whatever reason, the Eurozone is not. Let's just hypothetically say that.
That's hypothetical.
Right. But you could sell it for euros, convert it to dollars, right? Swap it, and then have more dollars in your possession. So there's always buyers, different markets that you can sell to get to the cash that you need to do what you need to do. But mark my words, and Lynette's words, is that gold and silver, if we get into a hyperinflationary environment, gold and silver are going to be the things that you want to maintain your wealth over time.
100%.
I don't even know if there's anything else that you could put your money into that is going to do the job that gold and silver will do during a hyperinflationary environment.
Well, considering that I've done those studies, there isn't anything that can not just save your purchasing power, but additionally put you in a position to take advantage of the opportunities, that wealth transfer opportunity in other income producing assets. So, and I mean, I've been studying this since '87. And I have not seen anything else that would do it. That's why I'm here. That's why I came to ITM Trading 22 years ago?
Yeah, almost.
No, just 22.
21. 21 in June.
Oh, okay.
All right, so Ron L. asks, let's say all hell breaks loose and silver reaches $100 per ounce. What do we do then?
You hold on to it for dear life unless you need to use it for barter. If we've gotten that local, but you hold on to it. What are you going to do? Convert it? And by the way, I'm not even sure that that's near its fundamental value yet using that particular number. But that's the point. You're not going to want to convert it into fiat because when it gets to 100 or 600 or wherever it's going to go, that it's going to, again, be super clear that the currency has lost all of its value.
Right. So you would only liquidate it if you needed to actually buy something specific. You would hold on to it because it's gonna continue to go up in value at that point.
In nominal terms, absolutely.
Correct.
Yeah. So you're not going to want to liquidate it for $100, guaranteed.
All right. So Lorena B asks, how come the dollar has officially 3 cents of purchasing power left? Can you show the formula on how to get to those 3 cents?
Well, when I say 3 cents, it's because the Federal Reserve Education Department, the Fed, that's what they're saying. I actually think it's a lot worse than that. I don't really know the formula that they use, but that's the official number. And we can put the link to the Fed, to the purchasing power of the consumer dollar chart in there so you can see it for yourself, Lorena. No, I can't give you the formula because I actually don't know what that formula is, but I know what the Fed says. And I know that the central banks and the governments have a tendency to change the formula of how they calculate things so that it looks closer to what they want, which is why I say it's probably worse than that. The only thing that's holding it together is public confidence. So people are still willing to work for it.
It's actually on the back of one of your face dollars.
Oh, yeah.
Are they in here?
Yeah.
So,
I think so.
the chart that
one.
she's talking about is actually, the 3 cents comes off of the Fred chart that shows the purchasing power of the consumer dollar from 1913 to present. So when the Federal Reserve took over. And it looks kind of like this, but it doesn't have the dollar bill on it. But it's basically 1913 being all the way over here, present day being all the way over here, and it shows that when the Federal Reserve took over, a dollar was worth $1, and now it's worth
Right. It
3
could buy
cents.
$1 worth of purchasing of stuff then. And a great example is, back in 1913, if you had a dollar bill or you had a $1 silver coin, so an ounce of silver, or this is a $20, but you had a $1 gold coin, which is about half the size of a pinky fingernail, it's a 20th of an ounce, you could have bought 11 loaves of bread with any one of those. Today, you're getting, if you're lucky, a quarter of a loaf, probably less than that, with the dollar bill. You can still, last time I checked, you could still buy 11 loaves of bread with the silver dollar, not in terms of the spot market, but in terms of what we would have to pay for this, the wholesale retail market. And, again, last time I checked, you could get 100 or 135 loaves of bread with that $1 gold coin. So I think that's a good example of the loss of purchasing power. But if you want to see it for yourself, then just go to the Fred. We'll put the link in there to the purchasing power chart, or just do a search on FRED, purchasing power of the consumer dollar, and the Federal Reserve chart will come up and you can see it.
Yeah, and the actual, what it says on the top of the chart is consumer price index for all urban consumers. So you'll know you hit the right one when you see that at the top. But yeah, and I think that's I love it when you do that illustration, because it's one thing to say there's only 3 cents left of the purchasing power, right, of that dollar. But back then,
But it's hard
the
to
dollar,
imagine.
the dollar, 1 ounce of silver and a 20-ounce of gold and a $1 bill could all buy
The
same thing. And now the dollar buys nothing, the silver buys something, but the gold buys even more, right? And that gold's really been the true, strong performer.
Well, yeah, like it has for thousands of years. They just don't want you to understand it.
Yeah.
And so they have to manipulate the visible price. But I mean, do you really think that Wall Street in any instance is going to tell you what the true fundamental value of any asset is?
And on the collectible side, since 1971, since we have a measurement from 1971 to present, this has outperformed bullion gold, so just the regular spot price of gold, by more than 2 times. I want to say it's like 2.5 times or 3 times to 1. I'd have to look at the numbers, but it's somewhere between 2 and 3 times what bullion's done of doing a better job in performance, even more so than the dollar, silver, bullion gold, and then collectible gold.
Absolutely.
Even better performance. All right, so Redbud F asks, when that Mad Max scenario happens, isn't an ounce of gold still just an ounce of gold?
Well, it is still an ounce of gold. It isn't going to suddenly have more gold in it. But considering that when the Mad Max, or it doesn't even have to get to the Mad Max level, okay? But when the currency is imploding, yes, you want the ounce of gold. Why? Because it has the most demand. This is a bazooka going into this battle. This is nothing going into this battle.
I think what Redbud's asking, though, isn't an ounce of gold still just an ounce of gold? So
But it is an ounce of gold. It's not going to grow.
Isn't this ounce of gold the same as a Gold Eagle ounce of gold?
Oh, is that? Oh, okay.
Yes.
I didn't read it like that, but I could imagine that would actually.
So just buy bullion, because an ounce of gold's an ounce of gold.
Right. Yeah. Wrong. Okay. Let's think of it like there's an auction. And you walk into this auction and there are 10 of the same thing on the table, and there are 10 people there and everybody wants one. Well, wherever the bidding opens, then they're going to pay for that. But when you're more elite, you want what nobody else can have. And so now they pull out one of these and they still have 10 people that want it. Well, they're going to bid that price up until they get it.
For a Mad Max scenario, you're going to need more than just gold. But
Right.
the goal of the gold, number one, if it gets to a Mad Max scenario, if the gold hasn't already been confiscated by then,
Good
I'd
point.
be surprised.
Thank you. Yeah.
Number two, and when I say gold, I mean bullion. I don't mean
monetary gold.
collectibles. At that point, you're holding on to your gold as long as you can to get to the other side of when, government establishes new structure, new currency, and then you can hold that and transfer that into the new system and get, and have your purchasing power intact. Your wealth transfers with you from the old system to the new system. Now, we don't know.
Thank you. That's a really good point.
The Mad Max scenario, I mean, it's so hypothetical, no one can really get in and answer that question, because how long does it last? What happened to make it that way? Was it an EMP attack? And, it takes 50 years to rebuild everything. I mean, it's just too hard of a question to answer. But if this is $3,000 and $3,000 and an ounce of gold is $2,000, and the fundamental value of gold is $15,000 or $20,000, it's almost irrelevant, the ounce of bullion versus the ounce of collectible, because you're buying it so far under the fundamental value of gold anyways. But this has the best chance of surviving government's overreach.
Absolutely. I mean, that's what I learned from my Uncle Al. When he could hold at least 3,000 ounces of gold in the legal way so that he can use it in the normal marketplace. And what did he have? He had the pre-33s.
Yeah, I really strongly believe, and I'm starting to hear other people, I think it was Ron DeSantis who was getting interviewed. I just happened to see a random clip, and he was being interviewed, and they asked him, what do you think about central bank digital currencies? And he said, well, they're terrible. And he said that, he goes, I believe they don't want you to they're going to go cashless, and they're going to go and get rid of all the other cryptocurrencies, right? They're going to start closing the exits down, so you're trapped inside these CBDCs, so they can make you do whatever they want you to do.
Yeah.
And the best chance of actually being able to own gold when that happens is by owning gold that hasn't been confiscated in the past.
Exactly.
Not to beat a dead horse over and over and over, but we get these questions all the time, and we constantly have to answer them. But
yeah, because and the reason is because this is what the elites buy. And the elites either write the laws or they have the ability to influence those that write the laws. It's just that simple. So that's the classification that I want to be in. I don't have to spend $8 million on a coin, but I want to be in that $8 million classification, because that is my best opportunity to be able to hold on to my gold and use it in the normal marketplace.
Right. In 1933, when they took it to, they gave everyone $20.67 an ounce, which is the going rate. But then after they got it all, so then they immediately revalued gold against the dollar up to $35, and everybody lost 42% of their purchasing power overnight. So all the people who were elite and had the inside information could then go get the gold that they could keep and then maintain their purchasing power and their wealth through that 42% overnight devaluation.
And through today.
Correct. So this is why. Yes. So Jody B asks, we live in New Zealand and are moving to a small cabin. Do you think should we sell the home we currently live in to invest in gold and silver, or rent the house out?
Oh, if those were the two choices, then I would sell the house. You have to do whatever you're comfortable, Jody, but I would sell the house and invest in gold and silver, because part of the problem with rent is that they will put rent controls in. At some point, they will put these rent controls in, but they won't control your costs.
Well, and also if hyperinflation comes in,
insurance,
who can afford to pay the rent anyways?
Yeah, very good point. So
You'll have squatters.
You'll absolutely have squatters, but so definitely, if you're not going to live in that house, if you have a nice small cabin, you can have your gardens and all that. And by the way, I might be in New Zealand right now because we're recording this. And New Zealand has been on my bucket list since 1987, when I first started working in non-dollar denominated bonds. The New Zealand bonds were my very favorite. So I had to learn about the economy, and I had to learn about New Zealand, and I kind of fell in love. And so a trip to New Zealand has been on my bucket list since 1987.
Well, I think it's important here to mention, too, as a blanket statement, what Lynette's saying, yes. But if you also have I'm just going to throw it out there. Let's say you had $1 million in gold and silver already. Yeah. Does it harm you to hold on to that house now and rent it out? Absolutely not. You could rent it out and get income from it, and because you've already built a portfolio of gold and silver that can help protect you, right? So my philosophy is always get enough gold and silver in your portfolio to protect yourself and have the peace of mind that you need, so that you can do all the other things in life that you want to do and hope to do and dream to do. If you build it right, you can have it all.
Yeah.
Right? But
exactly.
But if you only have the house and you don't have any other money to buy gold and silver, you don't have money in stocks or bonds or other areas where you can pull from to get gold and silver, then yeah, it probably makes sense to sell that cabin and buy gold and silver with it.
Not the
because
cabin,
you don't
the house.
have any. Yeah,
They're
sorry, the
moving
house.
into the cabin.
The house. So then, because you don't have any, you need definitely 100% need some.
Absolutely.
100%. If you don't have it, for what's coming, it's going to be terrible.
Really good point. So if you haven't done this yet, you need to click that Calendly link below and start your gold and silver strategy, and you start with your goals. So sometimes that's a little challenging for people to define those goals, but we'll help you define them. And then you make the choices with the gold and the silver that will support whatever your particular goals and circumstances and what you have to work with. But at least you have a plan in place, which you've got to have right now, and then get it executed. Because having a plan but not executing it really doesn't do you a whole lot of good. Just having a conversation and not following through doesn't really do you a whole lot of good. But we definitely do need more than just gold and silver. This is your foundation. You need this for protection and for opportunity positioning, but you also need food, water, energy security, barterability, wealth preservation, community, and shelter. And you can find information and people that are willing to help you on the Beyond Gold and Silver channel. I mean, we have my whole little community in there showing you what to do. And if you want to have conversation with like-minded people, check out thriverscommunity.com, and that's where you'll find that. Because quite frankly, we really are all in this together. And it's going to take all of us voting with our wallets that is going to make the difference. We can do a peaceful revolution if we just vote with our wallets. And I think that's critically important. But definitely do not forget that financial shields are made of physical gold and physical silver. Not this stuff, not paper or promises. And until next we meet, please be safe out there. Bye-bye.